Hello guys and welcome back. This is going to be an entire Trading 212 portfolio update / reveal. I'll be showing you guys my close to £19,000 portfolio that invests in both growth and dividend growing stocks held on Trading 212. My biggest holding, which used to be United Health Group, has now changed and I'll be revealing which one it currently now is. Additionally, I'll show you how all my investments have been performing over the past year, and finally give you some reasons I invest in these companies and how I think they will perform in the near to long term. So as always guys, if you've liked this sort of content and want to see more just like it, then feel free to subscribe to the channel. Let's jump in with the overall return of the portfolio itself and then we can do individual holdings. The Trading 212 portfolio is currently held on my stocks and shares ISA, and this has been the first solid month, as I said before, after consolidating the positions into one portfolio. I transitioned some £9,000 to £10,000 worth from my taxable account over to my stocks and shares ISA, where I held some individual holdings. And the holdings were sometimes similar or exactly the same as my taxable account. So the investments have obviously changed a little bit from what they originally looked like. My cost per share basis is actually higher in lots of cases and a bit lower in one case, so I'll be explaining that in a bit more detail. So as you can currently see here, I have about £18,846 held in this Trading 212 portfolio, and the overall return is sitting at £1,577, so up by about 9.13%. What's interesting about this particular portfolio is that we can see a lot of these returns have come over the past month, and that's about over half, I would say, of the returns. If we take a look back in Sunday the 14th of April, we can see I was up by about 4%, and we now are up about 9.13%. So over 4% of that has come in the past month. So in general, we've actually outperformed the S&P 500 over the same time frame. The S&P 500, I think, is up around about 1.94% or something similar, and we're up now about 4%. For the month, about 4.2%. So generally, we've done very well. Obviously, we should be noted that I'm not outperforming it long term yet. Hopefully I will be in the future, but I was consolidating these positions and picking the right stocks, not always picking the correct stocks. So the S&P 500 is beating me long term, but for the moment we're actually outperforming it for the month, so which is quite nice, and I'll take the back slaps that it deserves at the moment. And now that I've congratulated myself enough, we can take a look at my biggest holding, which is Amazon. I've got 21 shares sitting at a value total of around £3,157, and we've got around £154 in gains, up by about 5% or so. Now obviously it should be noted that I actually held this one in the taxable account around the $150 mark, so we're not seeing the complete gains that I've actually got from Amazon. We're up around about 10% more or so. I'm not going to split hairs over it, so I'm happy to keep this cost basis, and obviously the position's up by about 5%, so I'm not really too concerned. Overall, I really like Amazon as a long-term holding. I think it's doing exceptionally well in terms of its free cash flows and a few other things. So I trimmed a few other positions to make this my biggest holding. I cut down on my United Health Group shares just by one share, and I actually sold a bit of S&P Global. I basically overinvested in that one because I thought that it may skyrocket after its earnings report. It didn't, so I'm happy to sort of rebalance and get Amazon to my biggest position, which is what I wanted. Overall, this accounts for about 16% of my portfolio total, I believe. Let's take a look, yes. So 16.76%, and I still think it's actually fairly priced in terms of the market itself. I don't think that people are over-investing in it yet. I think it's one that can continue to rise throughout the year. The main reason I invest in it is because it's smashing those free cash flows. With its ever more profitability in terms of margins, and we're basically seeing a lot more increases in AWS growth re-accelerating, and advertisement being massively profitable now for them. Now they've decided to be a bit more aggressive with it. So I think they've attacked those margins considerably well, and I really wanted to be heavily invested in this one over other stocks like United Health Group. So I think this one will do very well in this year and beyond, and I use Amazon all the time anyway, so really I didn't see a reason not to have this as my biggest holding with the high conviction that I have for it. Now moving on to my next biggest holding in terms of weighting, we've got United Health Group. I've got around £2,898 worth, and that's 7 shares sitting at 13.5% in the green, up around £344. It should be noted that United Health Group was one of the only position I was down on in my taxable account, and it was sitting around the $500 mark when I sold it. So effectively, we were down in this position. We're now up by a smaller amount than what this currently shows, about 13 point. I think we're now about 3% up or something similar to that in realistic terms. But obviously, as I said with the other ones, I'm just going to start ignoring it and treating it as the sum as currently what it is, because I can't keep going back to a taxable account that I can't show. But on the whole, this one has actually done very well for me. Unfortunately, it was the only position I was in the red on, and it's recovered very well since I last saw it. So we can see on the last month or so, they're up around 16%, which is really nice to see. And they've just skyrocketed a bit after they've now reported their earnings. We've actually seen the major thing that spurred this was that their earnings were continuing to produce great growth inside guidance, and resolved outstanding costs that weighed over them, the concerns around the cyber attack that they suffered last year. United Health Group is a high quality company. They're having very impressive free cash flow growth, monopolistic position within their industry, and overall impressive dividend growth. So there's lots to like about this sort of company. The only reason that I may be a bit concerned around this particular holding is my knowledge on the topic. United Health is not one I'm massively familiar with. Obviously, being in the UK, I'm not massively familiar with the healthcare industry in America, and I think maybe this is a bit too much of a weighting that we're seeing for the holding that I haven't got massive conviction with. That's not to say I don't think it does very well. I know the financials very well. I know I can look at a bar chart and see how they actually make money, but I've never experienced them myself, and I think investing should be a bit of both, because if you're familiar with the products, with what they do and what they sell, then you'll be more willing to invest your hard-earned cash in them, which is what I've got with United Health Group. So this sort of high-quality business is actually very hard to find, so I'm kind of glad that I've invested in it, and obviously it's doing very well, up about 16% for the month. But I do think that it's going to be downsized a little bit in my portfolio as time goes on. I'm not going to over-invest into this one. It will either stay the same in terms of weighting, or it will just maybe be trimmed a little bit as it goes up. When it gets to the $560 mark, I'll take a look at it again, maybe, or if it starts to go down again, maybe we'll trim it again. So next on the list in terms of size, we have Vici Properties. This is one I really enjoy investing in. I have great faith in, which is ironic because I don't live in Las Vegas, but what I actually see in this company is a really high quality REIT. So we've got 118 shares at a cost basis that sits, I think it's around $30 mark now. Obviously, we were when we were investing in our taxable account, we was at $28. We converted it over. We bought around this sort of mark and have invested a little bit. I actually bought £100 or so around the $27 mark. So what I'm now doing is basically when I see it goes on a bit more of a dip, when people get a bit worried about interest rates, I actually add to this position when it goes down below the $28 mark. In all honesty, I think it's undervalued below the $30 mark, but I want to lower my cost basis as much as I can, obviously. So we've got £2,786 worth in this position, and we're down by about 1%. Obviously, overall, with those dividends that it currently has, sitting around about a dividend yield of 5.6%, we're actually up on the position with the dividends we've received. But on the whole, it's a position that I'm still in the red on, and the only position I'm in the red on this account in total. So moving swiftly along, if you're enjoying this sort of content and want to see more content just like it, then feel free to subscribe to the channel. It really will help me out with the algorithm. In terms of the next holding we haven't really seen, we'll actually look at Texas Roadhouse next, which is the next highest weighting, and this has been a massive outperformer for me overall. We've got currently 18 shares sitting at a total value around the £2,400 mark, and we are up by about 41%. I think this is actually reduced from what I actually bought it at. I think I'd about £600 worth in the taxable account that was held at a cost basis around the $100 mark. So really it's up more than that, but £700 in the green is definitely the best performer in the portfolio overall. The results have actually come from them smashing earnings reports, and I actually invested in them when they were people were concerned about the meat prices for Texas Roadhouse. They thought Texas Roadhouse would be unprofitable when they were paying for their products before they got to the restaurants, and that people wouldn't necessarily buy it once it got there. So I bought in that sort of dip around the this sort of mark, and I loved it below $106. Now it's obviously skyrocketed. The intrinsic value's gone up, but I do think this one is sitting around or above its intrinsic value now. So I'm not looking to add to this position, but we can see over the past month up 11%. It's very nice to see, and obviously has outperformed the S&P 500 in the same time frame. So actually, I actually wanted to invest in Starbucks originally when I looked at this investment, so I'm actually glad I didn't, obviously, because Starbucks has gone on a massive dip, and there's reasons for that. I'm not going to go into them, but I like Texas Roadhouse's potential for growth with a market cap company sitting around the $200 billion mark. I think this one's really good in terms of growth opportunities. Additionally, I think their growth is centered around America, which I actually like to see. I prefer that to growing into countries like China, which have a lot different terms of economics and government control for big monopolies like Starbucks. So I don't think they have to worry about their international growth, and I think that's a lot more reliable. I think it's priced near to perfection now, so I wouldn't necessarily add to this position, as I said, but I do believe that this is one that is constantly changing in its intrinsic value, like lots of other companies that grow their free cash flow very fast, as Texas Roadhouse is, and their growing dividend is very hard to beat as well. Obviously, I'll try and find that for you guys. It's very high, and I think it's sitting over the double-digit mark, really, with Texas Roadhouse. In terms of current weighting, it's actually up about, so it's sitting around the 13% mark. Obviously, with how much it's been run up, I don't expect massive gains from this one, but I never really do, and it just seems to always perform very well. So it may become more weighting. I'd be fine with that for Texas Roadhouse. I don't think that this one is going to perform badly for me in the future. In the next year or so, I think we may see this one maybe dip a little bit as people sort of take stock of the valuation we're currently seeing, and maybe it will take a little bit of a dip, but I don't think it will go massively down or anywhere near what my cost basis is for that matter. So next up we have S&P Global in terms of weighting, and this has been a stock I held briefly in my taxable account. I held one massive share, as anyone who watched the channel may remember. We currently have 7 shares sitting at a cost basis of around $419. And it's valued about £2,394. We're pretty much flat on the position, only up about 1%, so £39 worth. I don't think I've necessarily bought this one at the best time. I think that this one is currently had a good run up in the past in 2023 and has now seen a bit of a dip, not massive amounts. The reason I've chose to invest in it now is because I'm thinking about the long term and the ratings industry in general. I originally invested highly in this one because I thought they would raise their earning guidance, which they did, but the market just didn't even seem to react to that report. So maybe it's a bit of a muted thing, maybe people weren't particularly impressed by it. I think there's a lot of focus on international stocks at the moment, so sorry, not international, tech stocks even. So I think there's lots of things that people aren't really weighing in with this stock, and its intrinsic value is constantly moving up with those free cash flow growths that we're currently seeing from this company. So S&P Global is one of 3 companies that dominates the ratings industry in all forms of debt and financials, alongside Moody's and the non-publicly traded company Fitch. Personally, I believe these sort of rating agencies have had a very easy monopoly for years in this industry, and they've used that position in S&P Global's case to create indexing and analytics to inform on the market, which has actually been hugely profitable. My position is around about £2,300 worth, and in terms of weighting, that sits at around about 12.7%. I don't believe that I've necessarily bought it at the best time, but I've got a lot more conviction in this holding and how it makes money. I understand it a lot better than maybe United Health Group, so it's one I wanted to invest in now that it's gone in a dip. If it did go in a dip again for any number of reasons, obviously if we don't see those rate cuts or something like that, then or there's bad news, then we could add to this position again as it dips. I would hope it wouldn't dip too much, but I really don't know, and obviously no one else does. So what do we have next? We've got Visa. Okay, so Visa I absolutely love. We've got 10 shares, currently at a value of £2,269. We're up about 8% in the position, and we're sitting an unrealised gain of £172. Realistically, this one I was actually buying about $230 mark, and it's not showing the complete gains, it's just showing them as I've bought the stock higher, which is what I did. Overall, I love this company. I think it's a great one to invest in. The reason that I would love to have this as more of a core holding above the current held 12% is because generally I've got really high conviction in it. Every time I use my Visa card, I am reassured that I am a shareholder, and it would be similar for MasterCard if I owned it. I don't think it's trading at the worst valuation at the moment, and was considering adding to it quite recently around the $270 mark when we're sitting around about this sort of price range. But obviously it's still not that much higher than that. There's simply so much to like about these companies, I think. Visa and MasterCard, they're toll booth based. They have an effective duopoly in the space that they're currently in. They make so much money from a system that takes very little to run that they're just swimming in growing free cash flow that is predictable. Close to 20 billion in free cash flow now, you'd be forgiven for thinking the growth would actually be hard to come by for a company like this, but they own this space, and with the size of the transactions they are completing in terms of money, I think they can carry on charging more, and people will just simply pay it in terms of fees of every $100 or so, because the transaction themselves is what they're concerned about. They're not so worried about the fees that come from the card company. I don't think anything massive will happen for Visa this year. They will just be the steady powerhouse that I believe they are. And generally speaking, I think we will see a continued slow growth in terms of how they performed. They're pretty much in line with the market this month, maybe a little flatter on it or down on it. And their outlook for 2024 is more positive than I think maybe some people thought. If we see consumer spending cut back, then it could be that changes. But I would actually take that as a great opportunity personally and add to this position if it went down near my cost basis around $257 or so. So next on the list, we've got my newest holding, which is Salesforce. I won't go into massive detail about this one, but I have 10 shares at a value of £2,252. We're currently pretty much flat on the position, around 1.48% in the green, and we bought a share price around $274. Now, the reason I think this one is actually valued quite well at the moment is because we've seen a 10% drop in the share price after people reacted to the Informatica talks of acquisition, which I think is unlikely to happen now, reading certain reports. Additionally, I think generally if they can produce the growing free cash flow they've promised around the mid 20% free cash flow growth for the year. If they can produce that, then their valuation and their overall intrinsic value will go up. And I think that the share price will appreciate maybe when their earnings report comes up next month. So the reason to buy them now is because I think they are very reasonably valued, if not a little bit undervalued. And that's despite their run up over the past year, about 40%. So we will see what happens with this one. I'm confident that over the year they will do well. Whether the earnings report that comes up towards the end of this month in May, I think they report their earnings around about the 29th of May now. I think that will be actually quite interesting to see. And I think we may see this price go up or down depending on what the earnings report is. I think they'll continue to execute and do very well, and people will notice that and maybe push the share price up after its dip of around $300 to around $270 we're currently seeing. And finally, we've got my smallest position, which is Microsoft, which really doesn't need much of an introduction. Boy, do I wish I invested more in this company when I first started investing, because it was still undervalued. I knew that, I'd done the research on it, and yet I still was questioning my thesis surrounding it, which is hilarious because it's just the valuations we're currently seeing are very high in the market. So obviously Microsoft's price now I think is very high, and I'll talk a bit more about that. So we've got 2 shares at a cost basis of around about, I think it's $326, and we're currently up about 28% in the this position, up £148 or so. And obviously we only have about £663 worth in terms of value. I invested in it around about this sort of low point. This was my actual original investment that I've held for about, I think it's close to about 9 months or so. So that's a great return for 9 months. I just can't bring myself to sell it, if I'm honest. Microsoft's just awesome in terms of its AI capabilities, in terms of its free cash flow growth. Its margins, its subscription-based model. There's lots to like about this company in particular. Time will tell if this share price becomes more attractive. I think it will go on a little bit of a dip maybe if we see any underperformance. But it could be just as realistically that it goes up again. I think it's hard to say and hard to predict. If they underperform in any area, as with most of these tech stocks, just as we saw with Google when it went on its bit of its dip, they're priced to perfection at the moment, and I think they will drop by a considerable margin. If it drops back down to the $360 mark, I'd maybe take a look at it again, but I'm not looking to add to this position currently, despite its weighting being very small, around about 3.52%. Overall, yeah, I wish that was more, but I can't do much about it, and I'm not going to buy at the current prices and valuation that we're seeing at the moment. For those that are actually interested, I've beat a personal goal in that time frame. I invested in a cash ISA when I first started investing, and basically it had a return around 4%. So effectively I was trying to beat that for the year when I first started investing, when I put the money in the cash ISA as well. And all I can say is I've really outperformed that. Obviously I know the market has. I'm not saying I've done amazingly well as an investor. It's just quite nice on a personal note that I've actually outperformed my stocks and shares ISA against my cash ISA, returning over 4%, which I'm getting in my cash ISA in just 1 month, which is quite nice to see, really. Obviously, those unrealised gains and the cash ISA is safe, but for me, it's just been a bit of a realisation that maybe the cash ISA isn't always the best option. So there you go, guys. That's my full stocks and shares ISA. As you can see, I've got no real cash position at the moment held in this account, but I can promise that won't always be the case for much longer. I have a big surprise for you guys that I'm looking forward to sharing with you, but this value will be changing very soon. In terms of the stocks and shares sort of channel and stuff like that, thank you very much for watching. I really do appreciate it. I want to keep this portfolio sitting about 10 to 15 investments total. I don't want to go above that because the earnings reports and stuff are hard to keep track of for more than that sort of amount. So we'll see how that goes. And as always, I really do promise that I will eventually invest in an ETF and share that with you guys. As always, best luck with your investing. Thanks for watching, and I'll see you in the next one.